You wake up to the red glow of your trading screens. Another losing streak. Another night staring at the ceiling, wondering what's wrong with you. You followed the strategy exactly. You copied the so-called guru's step by step, yet your account is bleeding. The more you chase, the further freedom seems to drift away. Here's the hard truth. It's not the market. It's not your broker. And it's definitely not that one losing trade. The problem is deeper. You are building your trading career on a foundation that doesn't belong to you. Think about it. How much of your system did you actually design? The entry rules, the risk per trade, the time frame? Or did you just borrow a formula someone else swore was bulletproof? You may not realize it yet, but every piece of that system carries hidden assumptions about volatility, about drawdowns, about your capacity for emotional pain. And if those assumptions clash with your psychology, you will sabotage yourself without even noticing. This is why you hesitate when you should pull the trigger. This is why you revenge trade after a loss, even though you promised you wouldn't. This is why you size too big, blow up your account, and then restart the cycle again. It's not because you're weak. It's because the system you're trying to follow was never built for the way you think, feel, and react under pressure. Here's the reality nobody tells you. There is no universal perfect system. There is only the system that fits you, your tolerance for risk, your decision-making rhythm, your emotional bandwidth. Until you stop searching for someone else's holy grail and start engineering your own, you will keep bleeding slowly, trade after trade. This video is not about quick tips or hacks. It is about tearing out the root of the problem and rewiring how you think about trading forever. By the end, you will understand exactly why you keep sabotaging yourself, and you will leave with a clear blueprint to build a trading system that aligns with who you are, not who some stranger on the internet says you should be. If you're tired of playing someone else's game and ready to finally take control of your own, stay with me. The next few minutes could save you years of pain. Picture this. A trader named Daniel sits frozen at his desk. His setup is flashing the perfect entry signal he has been waiting for all day. Yet his finger won't click the mouse. His chest is tight. His thoughts are loud. What if I lose again? What if this is another fake breakout? Seconds pass. The trade moves without him. He slams his fist on the table. Daniel isn't alone. Thousands of traders live in this loop, hesitating, chasing, overtrading, because they have an identity gap they don't even know exists. They want to be calm, decisive professionals, but deep down, they still see themselves as gamblers trying to make it. And the gap between who they are and who they're trying to be creates internal resistance so strong it sabotages everything they do. Think back to your last major trading mistake. Did you size too large? Did you revenge trade after a loss? Did you break your plan because you couldn't stand missing out? These weren't random lapses in discipline. They were the predictable result of an identity misalignment. Here's what that means. Every trading system assumes a certain type of trader is running it. One system might require you to sit calmly through multi-day swings. Another might demand lightning-fast intraday decisions. Another might need you to stomach 10 small losses in a row before hitting one big win. If your personality doesn't match those demands, you will unconsciously distort the system. You'll close trades early. You'll override signals. You'll tweak settings mid-trade. This is why so many traders copy strategies that look amazing on YouTube only to blow up in real life. They don't realize the system was built by someone with a completely different risk tolerance, schedule, and emotional wiring. We need to map your identity gap before we do anything else. Start by asking yourself 3 hard questions. 1. What is my true tolerance for pain? How much drawdown can I stomach before I start changing the plan? 2. What is my decision-making rhythm? Do I think clearly in fast markets, or do I need more time to process? 3. What role does trading play in my self-worth? Am I using the market to validate myself, or can I treat it as business? Write these answers down. Don't guess. Don't tell yourself what you think a good trader would say. Be brutally honest. The more accurate your answers, the easier it will be to see where your system is fighting your nature. The gap is real. The gap is costly. And until you confront it, no amount of technical knowledge will save you. In the next section, we'll go even deeper. We'll dig into the root psychological forces driving your worst habits so you can stop fighting yourself every time you open a chart. Imagine waking up each morning with the best intentions. You tell yourself, today I will follow my plan. Today I will be disciplined. But by the afternoon, you've broken every rule. You're chasing trades you shouldn't be in, doubling down on losers, closing winners too early, or staring blankly at the screen paralyzed by indecision. You go to bed angry and confused. Why do you keep doing this to yourself? The answer lies deep beneath the surface. Most traders believe they fail because they lack discipline or because their strategy is flawed. But discipline is not the root cause, and your strategy is rarely the issue. The real problem is that unconscious psychological forces are steering your decisions. Until you expose and neutralize those forces, you will keep sabotaging your trading no matter how hard you try. Let's start with fear. Fear is not just the obvious fear of losing money. It's also the fear of being wrong, the fear of missing out, and the fear of future regret. Fear causes hesitation, late entries, premature exits, and the endless tweaking of systems that ruins long-term edge. Then there's greed. Greed makes you size too large, take marginal setups, and violate your own rules because you want profits faster than your plan allows. Greed is often disguised as ambition, which makes it even harder to spot. Another hidden driver is the need for control. Trading is inherently uncertain, but your brain craves predictability. When you feel out of control, you overanalyze every tick, micromanage trades, and constantly change variables midstream. Ironically, those behaviors increase randomness and destroy consistency. Lastly, many traders are trapped by emotional attachment to outcome. They define themselves by their PL. A winning trade makes them feel worthy. A losing trade makes them feel like failures. This fragile identity drives impulsive decisions as they seek emotional relief rather than following objective logic. You must recognize that these forces do not appear randomly. They are shaped by your past experiences, beliefs, and unresolved emotional patterns. If you grew up associating money with security, a losing trade can feel like a threat to survival. If you were rewarded for being right as a child, a stop loss feels like a personal attack. If you have a history of being overlooked, you might subconsciously chase trades for the thrill of validation when they win. This is why copying someone else's system almost always ends in failure. Their system is designed around their own psychology, their own fears and triggers. Yours are completely different. To stop sabotaging yourself, you need to unearth the specific beliefs and patterns that hijack your decision-making. One powerful exercise is to journal every trade immediately after you exit. Write what you felt before, during, and after the trade. Over time, you'll notice patterns. I panic close trades after 2 red candles. I size up when I'm trying to recover losses. I freeze when my first trade of the day is a loser. Don't judge these patterns. Simply observe them. This awareness is the first step to regaining control. Next, trace the pattern back to its root. Ask yourself, what am I afraid will happen if I don't do this? For example, if you always exit trades too early, you might realize you're afraid of losing unrealized profits because losing feels like failure. That awareness allows you to work on detaching your self-worth from any single outcome. In the upcoming section, we'll begin the real transformation. You'll learn how to upgrade your mental operating system so these unconscious forces no longer control you. But understand this, until you do this deep root cause work, no technical tweak will fix your trading. You can't out-discipline beliefs and emotions that operate 100 times faster than logic. You must rewire them. You've seen the patterns. You've mapped the fears, the impulses, the moments when you betray your own plan. Now it's time to upgrade the operating system that runs your trading decisions. Without this upgrade, you'll keep looping through the same self-sabotage cycle no matter how much you try harder. The first phase is awareness. You cannot change what you can't see. Awareness is not vague self-reflection. It is targeted observation of your triggers in real time. Start by creating a trigger list based on your journal from the last section. Examples. I feel a rush of anxiety after 3 consecutive losses. I want to double my size when I'm down on the day. I freeze when price moves quickly against me. Keep this list in front of you when you trade. The goal is to catch the trigger as it happens, not hours later. The second phase is interruption. Once you notice a trigger, you must break the automatic pattern before it hijacks your decision-making. Use physical cues like standing up, walking away from the desk, or even saying out loud, pause. Some traders set a rule. When a trigger hits, step away for 5 minutes and breathe. This simple interruption disrupts the emotional loop and gives logic a chance to re enter. The third phase is rewiring. This is where most traders fail because they think awareness and interruption are enough. But if you don't actively program a new response, the old one will return. To rewire, you need a replacement behavior that aligns with your trading plan. Example, if your trigger is exiting trades too early, your replacement behavior might be check my stop and target levels, adjust only if they violate my plan, and then step back from the screen. Practice this replacement until it becomes automatic. The fourth phase is reinforcement. Your brain needs consistent evidence that the new behavior is safe and effective. After each trading session, review the moments you successfully applied the upgrade. Celebrate them, even if the trade lost money. The win is not the outcome. The win is following the upgraded process. Over time, these small wins compound into unshakable confidence. To solidify the upgrade, layer in environmental design. Your surroundings either support your new operating system or sabotage it. Remove temptations. Delete brokers' mobile apps if they cause impulsive trades. Limit news feeds that trigger FOMO. Clean your workspace to reduce stress. Add visual anchors. Print your trading plan, your trigger list, and a reminder of why you trade. These environmental cues reduce the cognitive load and help you stay aligned when emotions run high. Another crucial element is identity alignment. Remember the identity gap from Section 2? Closing that gap requires you to stop acting like a desperate gambler and start operating like the CEO of your trading business. CEOs make decisions based on process and probabilities, not emotions. They track metrics, conduct reviews, and hold themselves accountable. Adopt that mindset now. Before placing any trade, ask yourself, am I acting like a professional operator or like someone chasing dopamine? Finally, integrate daily and weekly rituals. These rituals become the backbone of your mental operating system. Each morning, review your plan, visualize executing with discipline, and reaffirm your core rules. After each session, debrief. What went well? What triggers did I face? How did I respond? At the end of the week, step back and assess the bigger picture. Are you trending toward consistency, or do you see patterns that require another adjustment? This upgrade is not a one-time event. It's an ongoing evolution. But every time you complete the awareness, interruption, rewiring, reinforcement cycle, you weaken the old sabotage loop and strengthen the professional identity you're building. In the next section, we will tie this psychological upgrade to the hard mechanics of your trading system. Because once your operating system is clean, you must design a system that fits it perfectly. That's how you finally break free from the endless cycle of copying others and create a process you can trust for life. You've upgraded your mental operating system. Now it's time to build the external structure that matches it, a trading system engineered around your psychology instead of against it. This is where everything begins to click, because when your system and your mind are aligned, consistency becomes possible. The first pillar is position sizing mastery. Position sizing is not just math, it is emotional engineering. Most traders blow up not because of bad entries, but because they size trades so large that every tick feels like life or death. The fix is simple, but requires discipline. Define a fixed percentage of your account you are willing to risk per trade. For most traders, this is 0.5 to 1%. At that level, a loss is manageable, and you can actually follow your system without flinching. Write this percentage into your plan and never deviate. The second pillar is time frame alignment. If you are a naturally patient person, staring at a 1-minute chart all day will fry your nerves. If you thrive on action, waiting weeks for a swing trade to hit may drive you insane. Match your trading time frame to your personality. Intraday charts, 1 minute, 5 minute, 15-minute, demand quick decisions and emotional resilience under pressure. Daily and weekly charts reward patience and strategic thinking. Choose the environment where your psychology has the best chance to succeed. Then stick to it. The third pillar is expectancy framework. Expectancy is the average amount you can expect to make or lose per trade over time. It's calculated by combining your win rate with your average reward to risk ratio. If your system has positive expectancy, losses are just data points. If it's negative, no amount of discipline will save you. Build or backtest your strategy until you understand its true expectancy. Then train your mind to view every trade as one outcome in a long series rather than a make or break event. The fourth pillar is execution rituals. Even the best system collapses if you can't execute it consistently. Create rituals that make following your plan automatic. Examples: pre-market checklist, review news, mark key levels, set alerts. Pre-trade checklist, risk defined, entry confirmed, stop and target placed. Post-trade review, document result and emotional state. These rituals reduce decision fatigue and keep your actions consistent. The fifth pillar is feedback loops. You can't improve what you don't measure. Track key metrics weekly: win rate, average R multiple, max drawdown, percentage of trades that followed your plan. Use this data to adjust, not your emotions. When you see a pattern, e.g., your average R multiple drops after 3 losses in a row, create a countermeasure. E.g., take a break after 3 consecutive losses. One of the most powerful steps you can take is building a personal trading playbook. This is a living document that outlines every element of your system: your setups, entry triggers, position sizing rules, exit strategies, and review process. Add screenshots of your best trades. Include mistakes you want to avoid. The playbook becomes your reference point, especially when emotions run high. Remember, this system is yours. It doesn't matter if someone on Twitter trades differently or boasts about higher returns. Your only goal is to follow a process that you can execute comfortably and consistently over the long term. When you feel envy or FOMO creeping in, revisit your playbook. Remind yourself that your edge is built on alignment, not comparison. As you implement this system, you'll notice something strange. Trading starts to feel boring. That's a good sign. Boring means you're not chasing dopamine anymore. You're following a structured process. Professionals love boring because boring is profitable. In the next section, we will bring this to life with a detailed case study. You'll see exactly how a trader applied these pillars, overcame setbacks, and built a system they could trust. Meet Sarah, a trader who had been in the markets for 4 years, yet had nothing to show but a string of blown accounts and constant anxiety. She had tried everything: scalping, swing trading, automated bots, and even paid mentorship programs. Each time she would see a flash of success, only to sabotage herself and return to square one. Sarah's identity gap was massive. She wanted to be a calm, strategic trader, but deep down, she still saw herself as someone who needed to win big to prove she belonged. This mindset led her to size up recklessly and abandon her plan at the first sign of adversity. When she joined Mind Over Markets, she was skeptical, but she agreed to start by mapping her psychological triggers. The first breakthrough came when she realized how fear of loss controlled her every move. She kept exiting trades early because she couldn't bear the idea of watching a winning trade turn red. Her journal revealed that she closed trades at break-even nearly 60% of the time, even when her system signaled to hold. This pattern destroyed her expectancy. Sarah began implementing the mental operating system upgrade cycle: awareness, interruption, rewiring, and reinforcement. She taped a sticky note to her monitor that read, "Am I acting like a CEO or a gambler?" This reminder helped her pause when triggers hit. She also committed to a 1% max risk per trade, which made losses tolerable and reduced the emotional charge. With her mental foundation stabilizing, Sarah built a system tailored to her personality. She realized she preferred slower markets and hated staring at screens all day, so she shifted from 5-minute scalps to daily swing trades. She documented every setup in her personal trading playbook and only executed trades that matched those criteria. At first, the results were inconsistent. Old habits die hard. But instead of spiraling, Sarah used feedback loops to identify where she was slipping. She noticed that after 3 consecutive losses, she would impulsively change indicators. To counter this, she created a rule. If she hit 3 losses in a row, she would step away from the markets for 48 hours. The data told the story. Within 3 months, Sarah's win rate stabilized at 48%, but her average R multiple rose from 0.6R to 2.1R. Her account stopped swinging wildly. The equity curve began to slope upward with smaller drawdowns. More importantly, Sarah felt in control. She no longer judged herself by one trade's outcome. By the 6th month, Sarah had turned her first profitable quarter, netting a modest 6% return. It wasn't life-changing money, but it was proof that she could execute consistently. She began thinking like a professional, tracking metrics, reviewing performance weekly, and making incremental improvements rather than chasing the next shiny strategy. Sarah's journey wasn't about a magic indicator or secret entry technique. It was about alignment. She built a system that matched her psychology, closed her identity gap, and reinforced habits through structured feedback. Your path can look the same. You don't need to copy Sarah's system, but you can follow the process. Map your triggers. Upgrade your operating system. Build a playbook that reflects your strengths. Commit to consistent execution and data-driven improvement. In the next section, we'll focus on how to future-proof your trading so you don't relapse into old destructive patterns when market conditions change or when you hit inevitable setbacks. You've built the foundation, a clean mental operating system and a trading system aligned with your psychology. But here's the challenge. Markets evolve, and so do you. If you don't future-proof your process, you can easily slide back into old patterns when the environment shifts or when you hit inevitable losing streaks. Future-proofing ensures you can adapt without abandoning everything you've built. The first step is to implement structured review cycles. Most traders drift because they stop measuring. You must conduct reviews at 3 levels: daily, weekly, and quarterly. Your daily review focuses on execution. Did I follow my plan? What triggers did I face? Where did I apply the mental upgrade cycle successfully? And where did I fail? Weekly reviews expand the lens. What patterns are emerging? Which setups are performing, and which are deteriorating? Quarterly reviews are strategic. Is my system still valid in the current market environment, or does it require adaptation? The second step is to codify your non-negotiables. These are the core principles you refuse to compromise, regardless of market conditions. Examples might include: risk no more than 1% per trade, avoid trading news spikes, and never change position size mid-trade. These rules become the anchor that holds you steady when fear or greed try to take over. Next, build a continuous improvement loop. Treat your trading like a business with R&D. Allocate time each month to study, but only with the intent to refine your existing process, not chase shiny new systems. When you test a new idea, do it in simulation or with tiny size. Document the results. If it improves your expectancy and fits your psychology, integrate it slowly. If it doesn't, discard it and return to your core plan. Another essential element is emotional maintenance. Even with the best system, trading can be isolating and mentally draining. Establish support structures, a trading accountability partner, a mastermind group, or a coach who can challenge your blind spots. Avoid echo chambers of social media traders chasing unrealistic gains. They will trigger FOMO and destabilize your mindset. One of the most overlooked aspects of future-proofing is financial structure. If you constantly pull profits to fund your lifestyle, you'll feel pressure to overtrade when your edge goes cold. Create a buffer. Pay yourself a set percentage only when your account grows. Build emergency savings outside your trading capital so you're not forced to liquidate during drawdowns. Finally, define a long-term vision that goes beyond money. Ask yourself, what kind of trader do I want to be in 5 years? How does trading integrate with the rest of my life? Clarity here will guide your decisions when temptation arises. For example, if your vision is to manage a consistent low-stress trading business, you'll reject the urge to gamble on high-leverage setups just because they look exciting. As you future-proof your process, remember that setbacks will still happen. You will have losing months. Market conditions will change, but with structured reviews, clear non-negotiables, and a vision bigger than this week's PL, you will adapt instead of implode. In the final section, we will tie everything together. You'll see how the mental upgrade, the system build, and the future-proofing elements form one unified path toward long-term freedom in the markets. The path forward, you've come a long way. You've uncovered the identity gap that was quietly sabotaging your trading. You've exposed the root causes: fear, greed, control, and attachment that controlled your every decision. You've upgraded your mental operating system, built a trading process that aligns with your psychology, and learned how to future-proof it so you don't relapse into old patterns. Now you must integrate, because knowledge without action is worthless. Start small. Revisit your trigger list and choose one pattern to eliminate this week. Maybe it's closing trades too early. Maybe it's sizing up after a loss. Write down the replacement behavior you'll adopt and keep it visible when you trade. Your goal is not perfection, it's consistent application. Next, audit your system. Does it truly fit you? Does it match your tolerance for risk, your decision-making speed, and the amount of time you're willing to spend at the screen? If not, adjust it. Cut out setups that cause you stress or force you to abandon your plan. This is your business. Build it your way. Then schedule your review cycles. Put your daily, weekly, and quarterly reviews on your calendar right now. These reviews are your safety net. They will catch small issues before they become catastrophic. Finally, define your long-term vision. Close your eyes and imagine yourself 5 years from now as the trader you want to be. Are you calm, consistent, running a process you can trust? Write down that vision and keep it close. Every decision you make from this day forward should move you closer to that identity. I know this journey can feel overwhelming, but remember, you don't have to rebuild everything overnight. Transformation happens in layers. Every time you choose awareness over impulse, process over emotion, you strengthen your foundation. And eventually, the markets stop feeling like chaos. They become your arena, a place where you execute with clarity because you know exactly who you are and exactly how you trade. If this video spoke to you, don't just move on to the next piece of content. Pause and take action now. Comment below and share the one habit you're committed to changing this week. Your words may inspire another trader who's struggling. And if you want more in-depth training like this, subscribe and join the Mind Over Markets community. Every week, we release long-form episodes designed to help you master the mental and structural game of trading. Your freedom in the markets will not come from chasing someone else's holy grail. It will come from building a system that reflects your truth and executing it with relentless consistency. You now have the blueprint. The rest is on you.